Hey, this is Matt from InvestiQuant. Today is Monday, February 1st, 2021. And with today being February 1st, that marks the first trading day of the month here for February. And it's coming on the heels of some weakness. So on Friday, we had a pretty sizable down day. We had lots of range, lots of volume, closed down near the lows, not quite at the lows, but a pretty weak close taking place on Friday. Today is the first trading day of the month, and we have pushed higher in the overnight session, so it looks like we're going to have a gap up this morning. So I figured we would take a look at what has happened historically on the first trading day of the month when you gap up following a weak close. So let me go ahead and set that up and discover. We'll look at all four instruments this morning with an entry at 9:30 a.m. Eastern Time as a long. It will exit at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now for the opening filters, I'm going to use gap up. Simply, that means opening above the prior day closing price. So that looks very likely to happen. I'm going to go ahead and go with that. You can get more creative with this if you want on where exactly we're opening or how big is that gap up, but I'm just going to use gap up for now. Next, I'm going to go into the price pattern section. And we actually had a 10-day low close, and that can be found here in the new lows section. But for today, I'm going to just hit equals next to day after a 5-day low close. And the reason I'm doing 5 instead of 10 is it's just going to give us more samples to look at. When you go to 10, it starts getting a little bit thinner on the sample sizes. So I'm going to go ahead and stick with a 5-day low close. Next, I'm going to go into indicators. I'm going to use above a 200-day simple moving average. With it being a 5-day low close, majority of those are going to be below a 10. I'm not going to add that. I will add that. I don't know that it's going to make much of a difference, but I'll add below a 10 as well. And then lastly, I'm going to go into calendar, and I'm going to say that it is the first trading day of the month. Hit equals next to first trading day of the month in the unique days section. Now I can hit view results. All right, and here we go. These are the results of going long on the first trading day of the month when you gap up following a 5-day low close. This is taking place below a 10 but above a 200-day simple moving average. And historically fairly rare pattern. You've got the S&P with just 23 samples, the NASDAQ 20, the Dow 29, and the Russell 22 samples here. All of the win rates on these are coming in at least mildly favored. Some of them have some really strong win rates, but keep in mind these are smaller sample sizes, so it's not as hard to get some of these really big win rates like we're seeing right here in the S&P on a smaller sample size. So on the 23 samples that the S&P has, 78% of those have closed above the opening print. With the NASDAQ, that's showing 65%, the Dow 55%, and the Russell 68%. So as a group, they have been favored. And then if we look at the average win to average loss, that average loss is quite a bit larger than the average win there for the S&P. That is also true for the NASDAQ. It's true for the Dow, not as extreme as the others, and then Russell is pretty similar there in size for average win, average loss. But as a group, if you looked at all four instruments, you would see win rates have been favored on this day, but the bigger moves have taken place on the downside. So when they're wrong, the bigger moves have happened lower. So hopefully you found that helpful. Good luck today. We'll see you next time.